week and a half ago, you would like to do these screens. Remember, the market was looking a lot uglier than it does now. So we did the screen on the S&P 500. Find just cheap stocks with solid earnings growth and large dividend yields. Exactly what you need to do to stay safe in a more choppy environment than we had today. Only 23 names made the cut. And one of them was VICI Properties. It's VICI. You know, I came, I saw, I conquered. A real estate investment trust. It's the landlord for a number of casinos and golf properties. I see this as a good way to play the return of leisure travel post-pandemic. I like it as an inflation hedge. And this is one that's safe from the casino owners themselves, because the operators either have exposure to Macau, which is ruinously terrible, or ruinously competitive sports betting businesses. Plus, VICI's a cheap stock with a bountiful 5.1% yield, much better than treasuries. Since I highlighted last week, the stocks are already up nearly 8%. I wouldn't be surprised if it's got more room to run. Don't take it from me. Let's check in with Ed Pitoniak. He's the CEO of VICI Properties to get a better sense of where his company's headed. Mr. Pitoniak, welcome back to Mad Money.
Oh, Jim, it's great to be back. The last time I was with you, we never heard of COVID, and we were about 40% of the size we are now at VICI.
Well, I'll tell you what else we'd never heard of, Ed. We'd never heard of VICI because it was a sleeper Goldman deal. And I saw it, and I said, now, wait a second. I don't like Caesars, but this company, around 15 bucks. I hate the high flyers that open, you know, they're 15, and then they open at 50, and everybody loses money. Yours was the opposite. You came on, you told a great story. It's only got better. How have you been able to keep the growth? Because you are probably the fastest growing REIT to ever be in an index. I'm thrilled with what you're doing.
Yeah, Jim, just to that point, when we got included in the S&P 500 about 2 weeks ago, we became the fastest REIT ever to get from IPO to S&P 500 inclusion in a little under 5 years. And what we've been able to take advantage of is the fact that we are pioneering a new institutional real estate investment category, that being gaming real estate. And what we're able to do is acquire phenomenal assets acquired by phenomenal operators. We collected 100% of our rent during COVID, which was so key to value preservation. You cannot get value creation without value preservation. I was an English major at Amherst. But even as an English major, I know that if you go down 20%, you got to go back up 25 just to get even again.
Yes.
And then the characteristics of our business have allowed us to not only create value, but preserve it through what has been a really weird period of time, Jim.
Well, I've got to tell you, this most recent deal, the MGM deal, that was a work of brilliance. Look, the Caesars, I understood, they were distressed. You offer such a good proposition. Can you please tell our viewers why anyone would want to do these kinds of deals with VICI if they own the properties?
Well, because we have actually become a very virtuous source of capital, Jim. When we do a sale leaseback with an operator, we're giving them capital that they should actually compare to their blended cost of capital, their cost of debt, but also their cost of equity. And when we did a deal like we did with MGM last year and gave them money that was priced at about 5.9%, that was very, very attractive capital to MGM. They can deploy and continuing to build what we think is one of the best leisure entertainment hospitality networks in the world.
Now, I thought what was so exciting, you pretty much own the Strip, but then I saw Penn National in there. Now, they're all over the country. This could be just the beginning. Let's cover Vegas, and let's go to all the other casinos around the country. It's a gigantic industry away from Vegas.
It is. Yeah, we own assets from Lake Tahoe in the west all the way through Atlantic City and up into Massachusetts. We still have room to grow in the U.S. We're excited about growth opportunities in countries like Canada, Australia, and elsewhere. We're also very excited about growth in non-gaming, which was evident when we announced our very exciting transaction with Cabot, one of the leading placemakers and operators in what we call pilgrimage golf globally.
Now, I mean, am I wrong, but any place, let's say where they do the Coca-Cola 600, the Lowe's 600 in Charlotte. I mean, is any place could be a potential client for you, right?
Yeah, it could, and Vegas in that way, Jim, is almost a microcosm of the opportunities we feel we have, both in gaming and outside of gaming. If you look at the way Vegas has evolved in the last few years, with the arrival of the Golden Knights, the arrival of the Raiders, the arrival of F1, all of these kinds of experiential categories do have real estate elements that are very attractive to us. We're intrigued with stadiums, but I would tell you we're probably even more intrigued with training facilities. You're a football fan. You know that NFL teams today are investing tens and up to hundreds of millions of dollars in training facilities. They don't necessarily need to tie that capital up in those assets if they can deploy it better elsewhere. You
are so right. I mean, the NFL, even the colleges, they're spending obscene amounts, and they're not getting anything out of it. And you could be the answer to them. Have you been able to do any NFL ones yet?
No, we haven't cracked the NFL yet, but I will tell you that that global soccer, global football is a category we're intrigued with, a category in which we are having some initial discussions. And, as you and your audience are well aware, it's probably global football that is leading the way right now in terms of infusions of new equity, new ideas, and creating an ecosystem we think we can participate in and create a lot of value for our potential partners.
Well, I am so glad you came on. I was worried when you first started. I said, geez, they can only do so many casinos. But you are obviously thinking much bigger than that, and that is why your company has been on the move and been such a great growth performer with a fantastic yield. Very hard to find in this market. Ed Pitoniak, CEO of VICI Properties. Thank you so much for coming back on the show.
Thank you, Jim.
Guys, you got to look away from the crowd, okay? Everybody moans about all these stocks that go down. You see them all day here. How about a company like VICI, 5% yield? Look at the growth path this man has, and he's doing it all himself. Man, money's back after the break.
Coming up, where have all the IPOs gone? This company may put a charge into your portfolio. Cramer has all you need to know next.
Shepard Smith here. Thanks for watching CNBC on YouTube.